Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning, hello and welcome. You're with us on Bazaar Morning Call. We're coming to you as always live from the CNBC TV 18 Motilal Oswal studios. I'm Surabhi Upadhyay. With me, my colleague Nigel D'Souza. And today we have Mangalam in the house as well to liven things up, brighten things up. And, I dare say markets have several reasons to cheer middle of the week.
Yeah.
And for now, globally at least, the color seems to be green.
Well, a lot of news, on the global front as well, whether or not the US and China can seal a deal, whether or not there's going to be a new Fed chair, and, the courtrooms as well having their say with regard to tariffs. So plenty of global news flow, but I think our market's in a bit of a range.
Our market's in a bit of a range, for all that happened globally and locally as well after the 2 days of a rally that we saw post the RBI policy. The Nifty had just 1 point in terms of a change yesterday over the previous close. So maybe liven things up midweek, and that's why I'm here.
Love it.
Well, let's see if Mangalam can be the lucky charm, whether we get an upside break on that range today or not. But okay, let's straight away get to the action because there are lots of global headlines coming in. And for the Trump administration, I'm going with 2 wins because right now, for what it's worth, at least in the interim, it looks like 2 wins. Now, what are these 2 wins? One, the very clear signs of a thaw, some sort of a trade breakthrough with China, and we'll get to that in a bit. And second, there's relief coming in from the courts, at least an interim relief when it comes to the legitimacy and the legality of the Liberation Day tariff. So let's take it step by step. Markets, even ahead of some of these developments that happened, some of them happened post the US market close, markets were anyway feeling in good spirits. They were in high spirits, so to speak. So the gains were about 0.25% to as much as 0.6% on the Nasdaq in particular. Let's talk about the first quote-unquote win. The trade representatives on both sides, US and China, after the second day of talks in London, have been striking very, very positive tones. And what we have been given to understand is that they have agreed on a trade framework. Now, what will this framework exactly entail? The specifics are not out, but it should keep the tariffs in abeyance, which is what the Geneva Agreement had spoken about. So basically, this is going to be a framework to operationalize the agreement that the 2 sides had reached in Geneva, that's we know. However, please bear in mind that the presidents of both the US and China have to sign off on this, which is why a lot of the top-level US negotiators including Lutnick, including Jameson Greer, they'll all be going back to the US to get that sign-off from the US president. But first, let's listen out. Commerce Secretary Howard Lutnick, he was speaking to reporters immediately after those trade talks with China, and here's exactly how he's describing the progress.
We have reached a framework to implement the Geneva Consensus and the call between the 2 presidents, right? So that was on June 5th. So we've combined those 2. We've reached a framework for implementation. So the idea is we're going to go back and speak to President Trump and make sure he approves it. They're going to go back and speak to President Xi and make sure he approves it. And if that is approved, we will then implement the framework that we have worked hard over these last 2 days. Absolutely expect that the topic of rare earth minerals and magnets with respect to the United States of America will be resolved in this framework implementation. That is a fundamental part of that.
And that is a very, very important takeaway because rare earths are pretty much in some sense at the center and heart of all the conversations. And we've seen the overtures from the Chinese because they've started supplying those rare earth magnets to some of the large US automakers like Ford, General Motors, and even Stellantis. So some thaw is happening. Rare earths should be resolved as part of the framework. That's what he is saying. Now let's come to the second win for the Trump administration. And that's a win coming in the courts. Now, what has happened is this U.S. Court of Appeals, the Federal Circuit Court of Washington, D.C., that has basically said that tariffs can continue as of now. However, remember, this is an interim order. So the tariffs have been reinstated while the court continues to review their legality and their legitimacy because the lower court, the trade court, has struck down the tariffs as being illegal. It basically had said that the emergency powers that were used to levy these tariffs are not constitutionally valid. The appeals court is still examining that order. It will come out with its view, but in the interim, tariffs can stay. So that's a win of sorts definitely coming in for President Trump as well. Now let's come to how markets beyond equities reacted to a lot of these developments that were ongoing. It's been very range-bound, frankly. Between yields, we don't have much of a move, 1 to 2 basis points on the lower side. That's the US 10-year and even the US 2-year yield. Slight inch down. The dollar has been in a range, but the dollar index has managed to stay above 99. Even this morning, if you're looking at it, 99.16 is what we're getting on the screen. Coming to oil, oil is pretty interesting. After rallying to over 67 as we started the week, now we're looking at levels of below 67. So that's good news for India. The Iran-US talks are in focus over here on the potential of a new deal, and the Iranians are saying that they'll offer a counter deal. In the meantime, what we got from Trump yesterday, he was speaking to Fox News. He says Iran is acting much differently in negotiations than it did just days ago. It's far more aggressive. It's surprising to me, and it's disappointing. So let's see. It's negotiation, wait and watch. China seems to be progressing well, but when it comes to oil in Iran, seems to be a bit of a blip over there. Coming to our market, consolidation is what we've been seeing. That's what happened yesterday as well. The Nifty dip was absolutely unchanged. We're right at the top of the trading range. It's about a 550-point trading range from 24,450 on the way down to 25,100. The bulls need to punch through it, stay above it, and then only will it be completely proven, because the broader market also was cooling off yesterday. For me, the critical question is going to be, can the bank Nifty get back to its winning ways? It took a breather yesterday, but can it go back and provide some leadership to this market? Let's see. I guess, Nigel, we are all set for a very interesting trading session.
Well, that's right. During yesterday's trading session, there was a bit of a short covering bounce that did play out as well. You had the Nifty that in fact ended higher. The Nifty Bank unbound some long positions in trade, but there were some mild signs of some short covering, and that tallies in because the FIs, well, there was some mild action out there. They continue to remain net short with closer on 20% of the positions on the long side, while 80% of their positioning is on the short side. In yesterday's trading session, 3,000 contracts on the short side were covered out. Moving to the options data, then you had the 25,200 call. Well, that was fairly active. It added close to around 30 lakh shares, and the premium out there has come down to around 45 rupees. So, that's going to be a bit of a resistance zone going by the kind of writing we have seen at around the 25,200 call. On the downside, though, the 25,100 put, well, that had a fair bit of action. That was, the premium out there has come down to around 100 rupees or thereabouts. There was mixed action that was seen at this particular level, which brings us to the level. Just going by the options data, since that 25,200 level is seeing a lot of addition, and you have the premium out there in the ballpark of close to around 50 rupees, the resistance zone comes in at around 25,250 odd mark. So that's the first level. Then you're looking at around 25,400. Important marks to keep an eye out on. On the downside, you'll have to say both on the Nifty as well as the Nifty Bank that 20 DMA becomes a bit of a resistance, bit of a support mark. So the 20 DMA for the Nifty, well, it's only around 1% or so away, while for the Nifty Bank, it's close to around 2% away. So that's the level you're looking at. 55,500 should not break on the downside. For the time being, you'll say that maybe the Nifty Bank wants to take a bit of a breather and then resume its uptrend. But that's a reference point which is quite deep and quite far away from current levels. Though the recent high becomes a bit of a resistance mark at around that 57,100 odd. Now, since there is a lot of talk with regard to the US-China trade deal, and maybe in fact there's a framework that's been laid out, I'll keep an eye out on two sectors, but both of them did well yesterday. So let's see how they do, in today's trading session. The metal index, there was buying from the low point of the day, and the tech index as well. That, took the lead yesterday from the Nifty Bank, and it outperformed in trade. But if the global environment is a little bit better, then in fact we'll keep an eye out on both these two. And in terms of stocks that I'm going to be looking at, well, a few stocks have moved into the F&O band. So IRDA as well as RBL Bank, both of them should be on your radar since they moved into an F&O band. And from the cash market stocks, the stock that I'm going to be keeping an eye out on is CRISIL. Yesterday, in fact, the stock did pop up a little bit. In fact, from the December lows, it's made up close to around 50% of the losses that we saw earlier. The next mark you're looking at on CRISIL itself is, close to around 2 to 3% away from current levels. That's a bit of a resistance mark, 3 to 4% actually broadly. And it had big delivery waves buying. So from the cash market stocks, because of the high delivery, I'll keep an eye out on this name as well. But Mangalam, what else are you tracking?
Well, back to the US, we're watching out for obviously the details of what comes out from the US-China trade talks. Surabhi's pointed that out as well. But apart from all of this, all eyes will be on the consumer inflation data itself. The US consumer inflation for May is due today. Economists expect 0.2% month-on-month and 2.4% year-on-year increase. So to that extent, it will be an important data point, largely because all the other macros of the US have remained stable, including the 10-year bond yield, Brent, as well as dollar index, which is stable around that 99 mark itself. Indian indices, the Nifty was virtually unchanged yesterday as the IT stocks supported it and the banks took a breather. Let's see where that goes. Both, the DIIs and the FIIs were buyers in the cash market, so that's a positive. What's interesting is the question where has Nifty now begun to consolidate at a range higher than what it was earlier trading at. So if you look at it between May 16th and May 27th, which was before the RBI policy, all the highs on the Nifty saw supply between 25,070 to 25,150 or 113 at best. So May 16, May 26 and May 27th, all those data points come up for you. The high on the Nifty was just below 25,100. The last two trading sessions, the high on the Nifty has been about 100 points higher. So 25,160 to 25,199 was yesterday's high. So we'll keep an eye out on that. While 25,000 becomes an important psychological support, a broader major support for the Nifty would be the 20-day moving average, which is 24,833. For the Nifty Bank, the broad range over the last few trading sessions, 56,500, very close to yesterday's low, to 57,500 on the way up is something that we'll most definitely keep an eye out on. So that's about the indices and the setup.
Okay, all right. So let's see if we can get through these ranges, whether the Indian market can find its mojo back or not. Let's kick it off then with the equity call of the morning. Herald van der Linde of HSBC India says that India is offering a refuge for investors amidst jitters about global macro domestic policies. He says the first quarter earnings fared better than consensus expectations. Sustained recovery in demand is still a few quarters away. He adds that their top 5 ideas in India are Godrej Consumer, UPL, GAIL, Ujjivan Small Finance Bank and HDFC Life. He says they're neutral on India from the Asian perspective with a 2025 end index target of 82,240 for the sensex. Okay, all right. So that's a call from HSBC.